Hey everyone, this is Ryan B with Practical FX Trading. It is January 5th, 2020, and this is your US dollar index analysis. So I decided to add another weekly video that we just covered the US dollar specifically. And why I wanted to do this is, you can't use just the US dollar chart to trade something like euro dollar, but it's a good idea to keep the overall strength of the US dollar in mind. If you're kind of like unsure sometimes about which way the USD currency pairs are headed, this kind of gives you that really big picture. Every time on the Forex, if I don't know which way something's going, I try to look at the bigger picture. Especially near like the middle of the week, I'll start getting tired, right? Your brain gets tired. I've been doing lots of trading, so I need to kind of like zoom out and just see the big picture. What I'm showing you here is a ascending trend channels. An uptrend for the US dollar has been going since July of 2011. Okay, so this shows about 10 years of price action, and what we see is this three different tiers, if you will, of this ascending price channel. So we see the bottom of the price channel touched here back in July. We see it touched here in July of 2014, right? So July 2011, July 2014. Then more recently, in the spring of 18, we see price hovered and consolidated right at this 90 mark, and then shot right back up. It's almost as if price had a false breakout of this middle trend channel line, then price shot right back into the channel and continued headed back upwards. So where you see those false breakouts, right? So hey, you have an uptrend, you're expecting price to continue, then it drops back down, and then you're kind of like, oh, is a downtrend in play, right? Price drop below support, but then you see that quick recourse, and price adjusts itself, shoots right back up. That's a great sign that the trend has continued. So now if we go into more recent times, the last couple of years, we see that price between 2019 and 2020, going to 2020, has really hovered here above this support at 95.24. And we see it's staying right along this ascending trend channel. And the reason I drew this middle line here is because if we go all the way back to these candles, now remember these are weeks of price action, we see that candles touch the bottom of this middle line a couple times, few times, shot back above, and you can see then it came back down and rested on top of it, So you start seeing, when you're drawing your trend lines, you want to look for places where prices touched on both sides, and isn't it interesting how it all lines up? Okay, price touched the bottom here, price touched the top here, but then it's not exactly an exact science. Sometimes you can kind of scribble across the line here. You see that this action here, it kind of just goes sideways across it. But historically, over time, it really honors that. You can see here in July, it shot up for most of 2014, and then it did a little bit of a dip, and it touched that trend line before shooting back up. And you have to be careful. These can be a little bit subjective. You can kind of tuck them in and say, okay, now what I'm really looking for is I want my candlestick bodies to be closed above or below the line. You can see that happened again here. You can see price went all the way up to 99 and came back down, touched, right, once again on our trend lines, right? So that's how I drew those lines. And so my current, right now, this is definitely an uptrend. I'm a big believer in the big overall trend. So if the trend is up, then I'm looking for opportunities to buy. I'm looking for dips. So let's go ahead and clear a couple of these lines off and add some moving averages. So I'm going to go with this. I'm currently bullish in the US dollar. So you have to pick, right? You build your chart, and you're either bullish or bearish. And if you spend too much time fiddling around with, oh, I'm not sure which way it's going, you're just going to trade yourself out of money a little bit at a time. So you have to pick a sentiment. Make a decision. Go one way or the other. So right now I'm bullish because of this long sloping 10-year uptrend. Now, my sentiment could be reversed, right? So if I see price fall below this 95, then maybe I'll think that the dollar is in for a decline. But as currently, I'm bullish. So let's go ahead and add some moving averages. Moving averages are my go-to indicators. I use them in every chart, and I use a fast moving average, so a 20 period. So I change my inputs to 20, and I like to make my net a blue. And what I go ahead and do is I'm going to add my 50. That's my medium moving average. I make that a red, and I make my lines wide enough so I can see them. And then I make my last moving average a slow at 200. Okay. All right. So what this tells me is now this is great because what I'm looking for is I'm looking for my moving averages to be stacked. So fast on top of medium on top of slow. We see that happen here, right? Back in June of 2014, they stacked and then they spread out. So I had a bullish crossover, the fast crossed over the medium, so fast on top of medium on top of slow, and then they slowly expand. I need that expansion because you can see here, obviously, it's pretty self-explanatory what happens when those bullish crossovers occur and price expands. So now we've got the first part. We've got our bullish crossovers, everything's stacked in the right order, but it really hasn't expanded yet. And that's just because we've got some resistance here at 99. But for me, for trading, my 200 weekly moving average is sitting on top. Price is sitting on top of it. It's been sitting on top of it, in fact, for all of 2019 and some of 2018, right? So it's been gliding along on top. Slowly, it's not been a big, runaway train, but it's sitting there. And then also another thing, another strategy I use these moving averages for is that whenever price pulls back between the 20 and the 50, and especially if it pulls back and then touches the 200, that's like a buy or sell signal, right? So if this was a downtrend and these moving averages were reversed and I had long on top of medium on top of short, I would look for price to go up and touch with a rally, touch the 200, then I'd sell. In this case, last week price came all the way down, almost touched this 200, and that means I'm looking for a buy because it fell between this dip. So currently I'm bullish in the US dollar. And now things that can happen, let's say there's some geopolitical events, price comes down here, touches 95, but then pushes back up into this trend channel, right? Just kind of like here, a false breakout. I'm totally okay with that. That's still an uptrend, right? Price could come down here and sit in this pocket for a minute and then shoot back up. That's fine. That's still an uptrend. The reverse of that scenario is price falls down below 95, below the 200-week moving average and can't fight above, then I'm looking for a reversal. But, it's really dangerous to play the reversal game and think, oh, this is the ultimate bottom, I'm going to buy here, or it can't go any higher than this, I'm going to sell here. And that's, in fact, a great way to get knocked out of your trade. So I really, because here's the thing. If I'm looking at trends that happen over the last couple of days, well, they're nowhere as significant as the trend that's happened over the last 10 years. And the reason why the US dollar has been gaining strength, for all these years is because, as bad as people think things might be in our economy, compared to many leading nations, we've really our economy really has it going on. Definitely leads the world in a lot of sectors. So hence the US dollar strength. Also, in times of uncertainty, the US dollar is the most favored reserve currency, meaning if people aren't sure what's going to happen, they'd rather put their money in the US dollar because they have faith that it'll still be worth something. So that's saying a lot. We're definitely not in a wartime right now, but at the same time, there's always there's a lot of political strife going on. So the US dollar is a safe bet, safer sometimes than, a company's stock or what have you. So currently bullish in the dollar. Let's go ahead and zoom a little bit closer. Look at our daily. Oh yeah, so this is our daily. This just happened last week. And if you look at these candlesticks, this is very telling right here. Let me see if I can draw a box around this. So I want to highlight. Let's see if this is the tool. Oh, yeah, I'll kind of do it. Okay, look at these candles right here. So after a steep decline, price, the body of this, shot up all the way to 97, and the body of this candle closed in this inverted, it's almost like an evening star, right? This big descending bearish downtrend channel. But then it had a bullish engulfing candle right behind it. Another quick bullish candle right here for those last couple of days. Now, as we looked, now I did say those moving averages, right? We've got, my battery's running low, so I'm going to finish this chart out. Anyways, price is below our moving averages, below the fast. So we could see a decline, but due to this candle formation right here, and I put that on top of my longer analysis, I really think that our next bull move is coming up ahead. And what I can do from that last move is say, okay, if price drops below this support line that's at 96, this 96 all the way down to 95.80, then I can say, all right, maybe I'm getting bearish in the dollar. Maybe we're seeing a turnaround. But for now, as long as this holds, I'm still definitely bullish. I'm currently trading euros against the dollar. So for me, that's a sell in the euro dollar if I'm bullish in the dollar. All right. Thanks so much for tuning in. I'm going to do dollar DXY analysis every week, along with all the other pairs. Make sure you subscribe to our channel if you want weekly updates. All right. Thanks. Have a good one.